website insurtechstory.com, and we are available on Spotify, Apple, and Google. Today we are going to discuss on the topic the changing landscape of usage-based insurance. And for now, I'm delighted to welcome our guest, Aravind Ravi, who is the co-founder and CEO of Inaza, an Insurtech which caters to the needs of underwriters, managed general agents, and brokers in the rapidly transforming motor insurance industry with its platform as a service offering. So, Arvind, a warm welcome to you.
Thanks, Surya. Nice to be here.
So, Arvind, would you like to, talk a bit more about Inaza, how you started, and what's your mission?
Absolutely. Sure. So, as you said, I'm the CEO and co-founder. First of all, thanks for having me here today. It's a great pleasure to be a part of what looks like a very active podcast going on in India. Um, to go back a little to the roots of why Inasa was started and the whole story. Uh, I'm actually from Chennai in India, and road accidents in India is a big issue, isn't it? Like,
Yep.
and that's where the roots of my story is. One of my friends or my acquaintances lost their life in a road accident, and it was deeply impactful in me. And when I moved into Europe and I was starting to explore a career as a product manager, that's something that I always would remember. I would want to do something about road accidents, something impactful. Um, so there was an opportunity for me to start working on historic road collision database, which is in Ireland,
Right.
and I took advantage of it. And I'd built what I would call as an MVP. It's no way a sophisticated model, but an MVP of a model, an AI model that can predict road accidents in real time. So my dream was if you had this AI on your phone, connected to your car, whatsoever, it would just basically predict the probability of you being in an accident in real time and the severity of you being in an accident. So I was starting to look out for avenues to deploy this model, right? And I was also just finishing up on my master's in financial technologies, and I always had a background in fintech products, even while I was working for Tata in India. So naturally, my thinking went towards insurance because everybody who owned a car need to have an insurance in place, and that's the best way I can bring this model to everybody, right? So that was the initial thought process. And as I started showing this model, or this MVP, as I'd like to call it, to insurers, like I would have spoken to several high ups in companies like Zurich, AXA, Viva in Ireland. And it was very clear they were quite enthusiastic about the model, but they had no infrastructure to really take advantage of it. They all worked out of legacy systems, and they did 12-month policies whose rating systems were pretty much based on demographics and geographics. So there's no real way to take advantage of what I built, right? Because there was nothing as such called real-time processing in insurance. And that was the point of epiphany. Until that point, it was supposed to be a model that I bring to insurers and I put to use, and that's pretty much it, right?
Yep.
But then, as soon as I found insurers, and obviously insurance was so archaic, which was not a big revelation by itself, but that insurers are interested to basically modernize the whole ecosystem was a big revelation, because I would have thought they are least likely to adopt anything as new as this one, right? So that's when the real journey of Inaza began. So I would have met with my co-founder, Niall Crowley, who is the CTO and the real brains behind the platform that is built. And then my other co-founder, Dan Foley, who has a background in B2B sales and enterprise deployments, etc. So we three got together, and what we had built in Inaza is a platform that processes risk data in real time, so insurers can basically predict and prevent accidents or losses in real time, right?
Mm-hmm.
And we've built several other layers on top of this is called the decoder, by the way. It does real-time processing of risk data. And on top of this, we had built several different flexibilities of how you would use these insights. If you had the real-time probability and severity of risk, you would want to price insurance, but you had to have a usage-based insurance in place, really, right? Because if you'd
Yeah.
already paid for insurance, what's the point? Uh, so that's when the concept of UBI sort of played into our platform. So um, initially, we were targeting at insurers who were doing UBI, and they could take advantage of this model that we had built and the infrastructure we had to really improve their loss ratios and their underwriting performance. So, and then since then, what we've done is we've expanded the types of offerings you can build on top of NASA. For today, it's a completely modular platform. Regardless of what kind of product it could be pay as you drive, uh, and pay how you drive, manage how you drive, or any other tags you might want to give it, like embedded insurance, wherein you can embed insurance as a part of your car, embed insurance as a part of, say Ola in India, whatever that is. We can help insurers or these brokers build their insurance program on top of NASA and perform really good using our real-time processing. And that's what we do. It's fully modular, a completely device agnostic way for you to build products in record time. And we've been having good success with it so far. We're concentrating on the motor lines of business
Right.
for now, but obviously we would have ambitions towards other segments of business.
Mhm.
That's not a brief intro, but obviously that's the whole story behind what Inaza is and where it all began.
Yeah. So, talking about UBI, so it's relatively a new concept, right? It's not quite widely being implemented or executed as of now, and especially if you see the Southeast Asian market, right? So, having said that, how do you see this evolving, going forward with respect to the,
I think,
the application acceptance and how it's getting executed from a, B2C kind of a model?
yeah, I mean, there are two important things to really be conscious about, right? One is putting usage-based insurance into these boxes called pay how you drive, manage how you drive, or anything that I've mentioned now. I think that is very constraining by itself. I think the solution that you're building, whatever insurance program you're building, has to be grounded in an actual business problem or a customer problem, and that's when you're going to be very successful. So what do I mean by that? So let's take the European market, for example, for a brief second. Uh, Ensuring micro mobility companies here, for example, e-scooter businesses, or bike sharing businesses, it's very expensive to insure these businesses.
Hmm.
Sometimes highly prohibitive. The reason it is because the frequencies are just too high, the severities are just too high, and theft is something that you cannot avoid in micromobility business, especially e-scooters. So there's no real way to affect a performance change in these businesses, but it's inevitable. They need to be a part of our modern day lives, isn't it?
Yeah.
So building a usage-based insurance product for this particular segment would involve, having a highly sophisticated tracking mechanism, so thefts can be avoided. Having a high degree of sophistication in terms of your security systems. I mean, it could be, sometimes it could be as simple as having a mobile app that just says, it gives you red, orange, or green signals of risk that you're carrying as you're driving. So if you cross a certain speed limit, it's going to warn you that this is over the speed limit and it's not permissible, so slow down. Simple systems like that, all the way up to having an actual camera installed on these devices. They're going to make a big difference, right? And usage-based insurance is just a way to reduce the cost of insuring these people. So when you pay 100,000 for just 100 scooters a year, that's highly prohibitive. Whereas if you pay when you drive, it's going to make a big difference from a cash flow point of view for much of these micromobility operators, right? And it's going to be a effect. It's going to give them a return on investment much faster. And that's how UBI is solving a fundamental issue for these businesses. So it has to be grounded in problems like these, unless it is so. If it's just a UBI app for the sake of it, it's not going to make a big difference, or it's not going to have adoption increase significantly. That's probably just my opinion from the experiences I've had before.
Right. You mentioned about the cost part as well, and taking that into account. I have just two following questions for you. That is, when we look at the adoption as we partially touched upon, so do you see an increase in adoption of usage-based insurance at a global scale? And are there any direct relation to pricing that can have an impact on how end users see the benefit versus the cost?
Um, I personally feel cost is probably the least prohibitive of the reasons why people would move on. It's more to do with the type of travel we do, the type of lifestyles we choose to have, and the
Right.
types of experiences these companies are trying to create for us.
Yeah.
How far are we from not owning a car at all? Not too far. I mean, at least definitely some segment of the market has moved away from owning cars and are pretty much just using shared mobility to get the way around. Right? It differs. It's still a very small segment of the market. So when you look at this segment of the market, UBI is inevitable, isn't it? Like if
Right.
you're just an example that I said about micromobility, UBI is inevitable. It's just a part. It's just an important enabling factor in an experience that these companies are trying to create for us, for our lifestyles. So it's going to be inevitable in many cases that policies become UBI just for this simple reason. Um, Cost is interesting because obviously there's a lot of macroeconomics involved in shared mobility, and startups and everybody in the value chain live or die by these macroeconomics working in their favor. So cost is only as prohibitive as the macroeconomics are limiting. If it is if it works within the macroeconomics that you've established for this new micromobility or shared mobility company, it's not going to make a big of an effect in the end user's experience, right? Ultimately, that's what matters.
Right. Yeah. You know, now, I mean, increasingly we're going to see an adoption of EVs and of course then connected cars, right? So, and this has come up to be the next big thing in the automotive space. So, how do you see this fitting in with the UBI ecosystem? I mean, as you said, it's going to be inevitable. So, there, how do you
Yeah.
see the fit there?
Yeah, I mean, the ownership side of this market is what you're really asking about. I mean,
Yeah.
there are new EVs in place. There are new types of AVs with new types of ADAS systems on board. Now, how are they going to be insured? That's the big question, isn't it? Like, one of the things that, from an insurance point of view, that you have to understand is any of these new cars are visibly seen to reduce the frequencies, right? The frequency of accidents that you're having, the frequency of claims that you're having, thanks to the n number of security systems that are installed, thanks to the robustness of these vehicles, so on and so forth. Uh, but it's not an absolute zero, and it's never going to be an absolute zero, isn't it? Like collisions will never be an absolute zero. So it's important to look at the severity, and if you look at severity for these new types of vehicles, they have exponentially increased. A single crash could mean you're paying out a claim bigger than 5-6 crashes in a normal car, just because of the sheer amount of technology that's present in these cars.
Hmm.
So from an underwriting performance point of view, it's only going to get more trickier as soon as these new cars are going to roll out in the immediate future. I think at some point in time we'll have the claims data to even out the premiums, to yield a better performance, right? But in the immediate future, it will come as a shock, and we're already seeing that in several different markets when EVs are being rolled out, just due to the sheer ineffectiveness of predictabilities. You have a higher premium to compensate for it. So in these cases, UBI can be highly empowering. The reason is, let's say you have an electric car, right? And you as an insurer is not comfortable in producing a premium for a year long.
Right.
Rather, you want to give a monthly premium, which is based on your performance of driving, and perform and the number of kilometers you've driven, right? It allows you to still capture a segment of the market, allows you to be very vigilant about the frequencies and severities, and at the end of the day, gives you enough time to react. And now you are all of a sudden have a situation where you could reprice the risk in as little as a month instead of waiting a year, right? Or probably a week, or probably in the next trip. It depends on. It basically gives insurers the flexibility to reprice risk in a more often, in a more real-time basis, and that's what UBI is going to bring.
Right. I mean, of course, what I can understand is if I look at the next 4 to 5 years, there is certainly going to be an exponential surge in the demand of UBI, right? And what's going to really leverage this is how insurers actually, how effectively rather they employ UBI telematics and connected vehicle data that they're going to, receive from every connected cars or sensors or Oracle. So, do you see any sort of challenges that insurers should be aware of? Kind of, what, or rather, what would be your take or advice for the insurers who is looking into this segment?
I mean, advice would be a very strong word, right? We're a small blip in the entire insurance ocean, but I can share some experience in
Yeah.
building these products. One thing to be very keen of is, any of these digital initiatives, like I previously mentioned, has to be grounded in a particular business problem for the insurance, right? It has to be either a customer problem or a customer experience problem you're trying to solve, or an underwriting problem you're trying to solve, right?
Mm-hmm.
So once you figure it out, it's quite easy to figure out what kind of data you need to create that experience for your customer, or to create that ideal underwriting performance. And then you get all your ducks in the row, and UBI should be seen as a way to easily implement this digital mission, right? UBI is going to be creating this win-win situation for the adopters, which is the end users, and
Yeah.
the insurers,
Yeah.
to take on these new initiatives much more easily, right? And 5 or 10 years ago, this might have not been possible, where we didn't have the surge of subscription mentality with people, right? Whereas right now we have that, right? If you ask my father or my grandfather, they would have said, I would rather pay for my insurance once in a year and forget about it than to worry
Yeah.
about it. Whereas the whole mindset has changed right now. And that's how you need to see UBI. Insurers, if they look at UBI and say, yeah, I'm going to roll out another UBI product because I need to compete with the rest of them in the market, right? It's going to be questionable. If it's grounded in an actual problem, then you know the right data to go for, you know the right infrastructure to build around it, and you know the exact pricing that's going to go behind it. And that's going to make a big difference in terms of scaling your product as well as in your underwriting performance.
Yeah, true. Do you see, as you said, the mindset is changing, right? And especially with the new generation who is starting to adopt insurance, not, the way it was being perceived before. Just kind of, for example, in India, it's being perceived as a tax saving tool, right? And also overall, if you see, insurance is not kind of a product that's being perceived quite well, apart from the certain part of the automotive insurance. But do you see any challenge with respect to how new driver education is required uh, with respect to the UBI model?
Yeah, absolutely. So one of the things that is very important for any financial product is to create shared value. And I think insurance is only starting to deliver that to their customers. And what is shared value in the first place, right? From an insurance point of view, especially motor insurance point of view, how do you as a driver and me as the insurer work together in stopping your accidents?
Right.
It's not about covering your losses, right? It's about how do I stop these accidents from happening. And nobody wants to crash, even if they got insurance, and none of the insurers want to see you crash, right?
Yeah.
And that's the only thing that both of us are aligned on. And so how do we work together in stopping them from happening? And if you approach your product build or your the product philosophy from this point of view, it's easier for you to build that affinity towards your brand and towards the insurance product that you're building, right? So, and I think a lot of insurers in the West are adopting shared value. So, for example, there's a company called Vitality in UK,
Yeah.
and every one of their products are grounded in shared value. There are other such players in the market who are grounded in shared value, and that's going to make a big difference in driving adoption with your customers and driving the mindset of customers.
Right. Yeah. True. I think shared value. It's one of the important point that people should be definitely working upon when we talk about innovative modeling, making insurance more adoptable. And thank you, Arvind. A fantastic discussion, and thank you for sharing your thoughts. It was truly a delight to have you as a guest.
Thanks for having me.
And lastly, to wrap this up, thank you for listening, and see you at our next episode. Take care and stay safe. Goodbye for now.